John K. emailed us at richhabitspodcast@gmail.com. And John K. said, "Hi, Austin and Robert. Thank you for all you do. I appreciate the simple and steady approach to investing that you two give in your guidance. I'm reaching out because several months ago at the beginning of the year, you talked about the potential growth opportunity that could take place in the quantum computing space." He's right. It was one of our major predictions for 2025 was the rise of quantum computing. And as you're soon going to figure out here, Robert, we were right. So John says, after doing some research, I decided to put some of my asymmetric risk, high reward money into Rigetti, IonQ, Qubits, and QUBT back in March, and I've already seen some gains of up to 400%. Jeez Louise, John, that is insane. John says, I still believe most of the movement has only come from positive news cycles and hype, with real profitability still several years away, which we would agree with. John says, I know Robert has mentioned in the past his 50% off the top philosophy, but how do you balance being a long-term believer in a sector versus amazing short-term gains along the way for these asymmetric plays? Also, do you have any updated long-term views on quantum computing? Wow. Well, first off, John, super excited for you, man. We had our predictions episode back in January. I think it was like January 7 or 8. It was like the first week of January. We had 3 major predictions. The first one was volatility, which we absolutely saw in April when we had the Trump tariff tantrum. Our second big prediction was the reinvigoration of the IPO market, and we've seen some major IPOs this year. And our third major prediction was the rise of quantum computing and how that's going to be a big new sector here to keep an eye on. And I would argue that we batted 3 for 3 on that one, Robert, now that we're in October. But what's your perspective here? If you were up 400%, Robert, on some very asymmetric risk money, right? High risk, high reward. This isn't retirement money. This is play money. How would you take profits, reallocate? What would your strategy be?
It's an incredibly great question and very difficult to ask because on one hand, when you believe in a sector like quantum, like we have for AI for years, it's really hard to think, man, this just keeps going up and up and up. I don't want to take profits. I just want to keep adding to my position and keep going. But the number one statement you hear in every casino across the world is, I was up. When they walk away from the table after having a big run in blackjack, they didn't take any off the top, they didn't listen to any of the strategies, and they didn't walk away. So as much as it's a difficult question, I think you still have to take money off the top. It doesn't mean you can't dollar cost average back in on the dips. But along the way, I think everyone, even in the NVIDIAs of the world, and the Palantirs of the world, and the Qtums, and the Rigettis, and all of these really high-flying stocks we talk about, you still have to take profits. What do you do with it? You redirect it into something a little less volatile, a little more long-term, and then you can always get back in on the dips. Because when asking the other part of the question, where do I see quantum long-term? Obviously, I think it's going to continue to grow, but I do believe we're very much in a hype cycle in quantum computing right now. We will see volatility. We will see some major retractions, but in the long term, I believe quantum is going to be great. And some of the stocks we called out earlier in the year, I think are still the leaders and are really, really good stock picks. So that's what I would do. Take some along the way, take some profits, get back in on these dips, see and wait out the volatility because I believe we will see it. Because you have to think of it this way. Jensen Huang said that he felt that quantum was 15 years off still. And then he kind of retracted that statement. But I do believe real quantum interface and use is 3 to 5 years away before it's really heavily used on a daily basis throughout big companies. So I think you have some time and we will see volatility, but I would keep dollar cost averaging on the dips.
I like that answer, Robert. I think the same thing, right? I was up. John, if I were in your shoes, I would probably take let's say that you had invested $1,000 and now you're up 400% on that $1,000. So it's now 5x in value to $5,000, right? 100% returns a 2x, 400% returns a 5x. So now you have $5,000. If I were in your shoes, I would take half off the table, so $2,500. I'd set aside money for taxes. Maybe if you wanted to wait until next year, depending on your tax situation, you could wait until next March if you wanted to. I personally wouldn't. I don't believe in that. I would just take my profits and go. I would take $2,500 off the table. You still have a little bit, rocking and rolling here, but it's only equivalent to $500 of original capital, right? It's only equivalent to half of your original investment, and you've now made so much more back on the back end. Now, what would you do do with the other 2,500? In my opinion, if I were in your shoes, John, I would think about adjacent industries that are going to benefit from the rise of that underlying industry, right? So what has to be true for quantum computing to be a viable solution 5, 10, 15 years from now? Well, I'm sure artificial intelligence has to do well. I'm sure we need some cool infrastructure stuff. Like what are adjacent plays that are going to also do well as quantum computing does well? And so maybe you just put in some money in AMD and Nvidia and ARM holdings, or maybe it's putting some money into Taiwan Semi and ASML holdings. It's staying adjacent without being so risk on into an unprofitable sector.
Wow, that is an incredible breakdown. We always say take notes and take action. So I hope all of you are taking notes because I love that takeaway. Adjacent sectors. I really, really appreciate that take, and I think that is just really sound advice. So I hope that helps everyone listening. You have to take profits along the way. Otherwise, it's all unrealized internet gains. And we want to see you guys diversifying and staying steady and keep it in order so you don't get in a situation where you're up 400% and then it comes back down 350% because you didn't take profits.